What's currently Bitcoin's long-term situation? Are we already depressed enough? Are we going to shoot up from here? Is the bear market over? Are we currently at some kind of equilibrium price? We try to answer this using several charts. So in this video, we're going to look at 8 different charts. They're all taken from the weekly Glassnode newsletter. So the link to that newsletter is down in the video description as well. And first of all, we're going to look at how is the balance on exchanges developing. So that's the very first chart. Let's look at this, the percent balance of Bitcoin on several exchanges. And this is a chart that starts over here since the Corona crash, right? So this is a chart that starts in 2020. This is the crash where Bitcoin fell in a single day by more than 40%, right? And on that day, the balance on exchanges shot up. So what happened over there is basically people tried to risk off, right? They might have had Bitcoin in cold storage and they then moved it onto exchanges in order to sell it off because people simply panicked, right? And so we had this peak over here in March 2020, an all-time high of the balance on exchanges. And since then, we saw a gradual decline, right? So the balance on exchanges went down and down and down up until 2021, somewhere around April. Okay, and since then, we are pretty much in a sideways movement. And it's interesting because this low over here, the low in balance of exchanges, coincides pretty much with the price top. Okay, so we had a price top here in Bitcoin. We then had our summer depression where we went down by 50% roughly. Then we had another recovery where we did get another all-time high, but those were not really noteworthy, right? These all-time highs were pretty much the same kind of level that we've seen here in April. And the balance on the exchanges was pretty much flat. Now, what's interesting is we are currently at a comparatively low level here as well, right? Pretty much at an all-time low for the balance on exchanges. So what does that mean? If this would go up again, we could potentially see the price go further down, because then people would be selling off their Bitcoin potentially. If this would go down though, right, then this could be good, right? Because less liquidity on exchanges means potentially less sell pressure. It means more people hold strong onto their Bitcoin, which dries up supply. Less supply, same demand means rising prices. So that's the idea. Currently, though, there doesn't seem to be too much action around this. So the Bitcoin that's currently on exchanges is pretty much the same kind of percentages that it was around 1 year ago. So this graph over here, it's measured in percentages, right? This is not a pure Bitcoin. This is percentages, and Bitcoin is somewhat inflationary, right? There is new Bitcoin coming out every year. But if we had a chart that would be expressed in Bitcoin itself, in numbers of Bitcoin, it wouldn't look vastly different, right? Because in 2 years, there's not too much new issuance. Now, let's continue by breaking this a little bit up and by looking at different kinds of exchanges. So actually, you want to look at 2 different sets of exchanges over here. So first of all, what we find is there are a few exchanges, a few very popular exchanges that continue dollar cost averaging into Bitcoin. They continue to increase their exposure to Bitcoin. And those are namely Binance and FTX. When we look at Bittrex, there's also a bit of an accumulation. Bitfinex also does have a bit of an accumulation, but it was contracting at a certain point in time here as well, right? The Bitfinex area over here, it was thinner over here than over here, and here it was thicker, so they were selling off here, then they are accumulating again. The main growing participants over here are FTX and Binance. Now, why are they buying Bitcoin? I've got 2 theories over here, right? First of all, these companies and the company's leaders, they are probably long-term bullish on Bitcoin, and there aren't too many long-term holds that you can be really safe on holding over the long term, right? That it will appreciate versus traditional fiat currencies. And so having Bitcoin on your balance sheet, accumulating Bitcoin over the long term does make a lot of sense. And so FTX and Binance seem to be the most bullish. I personally also think they are one of the best of the centralized exchanges. I'm personally not a fan of centralized exchanges. I prefer just using DEXs. I prefer doing my own custody, having my own wallet with my own keys. So I don't really like to be exposed to central regulation. That being said, if I had to choose a centralized exchange, I think Binance and FTX are pretty good bets. Bitfinex does have a somewhat ambivalent past. For Bittrex, I don't have too much background to give any kind of indication here. Now, what I found more interesting though is what kind of centralized exchanges are actually not adding more Bitcoin to their balance sheet. And this chart here on Glassnode, I think, is a little bit confusing because we do see actually Gemini increasing their exposure, right? When we look here at Gemini, this sliver over here is actually going up. What I did find interesting though is how much Coinbase did not increase their exposure to Bitcoin. And that might have something to do with regulation, because when you look at FTX and at Binance, they might also buy these Bitcoin in order to offer derivative instruments, right? In order to hedge their positions against, for example, short positions that they might be offering to their clients, right? Like short futures and options and all of that. And sometimes you, as a centralized exchange, you don't want to have direct price exposure to this, but you just want to make money off of the fees, right? And so you need to hedge yourself against the market, against the price risk. You want to be delta neutral to a certain way. And so that's potentially one reason why FTX and Binance continue to accumulate. Coinbase might have regulatory pressures from the US, from the SEC, that they can't simply offer all of these very complex derivative products, thus indicating that Coinbase isn't maybe that keen to have a lot of Bitcoin on their balance sheet. But I still found this very, very interesting. I found it interesting how the Bitcoin balance on Coinbase is declining with time. I did not expect that. I found that an interesting piece. Now, here we have this split up of FTX and Binance one more time in detail. And over here we see again, we see this expressed in percentage terms. So over here, this is 1%. It's not the prettiest scale in the world, right? But this means 1% over here. This means 4% over here. And we started out with FTX not owning that much of Bitcoin supply held on exchanges. So this is a percentage terms versus the Bitcoin held on exchanges. And now FTX has a 4% share of that. Okay, and it is increasing quite massively over time. We do see a bit of market timing here, which I find interesting, right? We did see accumulation, further and further accumulation, and then a big sell-off. Where did the sell-off appear? Over here, pretty close to the top of the market. So FTX seems to be doing something somewhat right here. They seem to be buying low and selling high. And so their balance then suddenly went down. And then they started accumulating again over here. At this point, when we already went down around, I think this might have been 35% or so, the overall trading range here was around 50%, a 50% drop from here, right? 60K to 30K. So they started accumulating again over here. It continued to go down, but they accumulated more and more. Then they sold off one more time over here. They sold off one more time over here. Exactly at the high prices, right? At the high peaks of the market. So I think this is simply a nice thing to monitor, right? These charts, by the way, they are not, if you want to monitor them live, right? You got to sign up for Glassnode. I'm not signed up. If you are though, this specific chart here, this snapshot, it is free, right? It's in the newsletter. But if you want to see the live updated chart, you got to be signed up. And I think it's interesting to look at this when this might really crash down again, because it could potentially be, again, another sign that we might have peaked, right? FTX seems to be timing this not too badly. But over the long term, they're accumulating. So that's also just another message, right? Dollar cost averaging into Bitcoin, as in buying regularly, is not a bad idea. So you want to look at a website, for example, I'm also going to link this down in the video description, at a website like DCABTC.com, or it's BTC DCA. I'm not sure. It's one of them. It's a dollar cost average calculator for Bitcoin. And there you can simulate actually. If you would buy Bitcoin, say once a month for say $500 US, right? And you would do this, say, for the last 3 years. How much money would you now have by the end of these 3 years? And then you can get some kind of a proxy. Of course, the return of Bitcoin in the early days was higher than what we can expect in the future, because now Bitcoin is way larger. So the growth is probably not going to be as high in the future. But still, it gives you some kind of a gauge, as in, if you really buy in regularly, what kind of a capital might you expect in a few years from now? And that's useful, right, for planning, right? If you're planning to, say, save for a down payment for a house, for example. For anything else that's not super crucial, but that might be a nice luxury in the future, you could use that to simply just dollar cost average in and then have a nice cushion in the future, something to consume later. So that's a pretty safe strategy, right? Dollar cost averaging into Bitcoin. If there is a strategy in crypto that I'd regard as very solid and time proven and very likely to work over the long term, then it's simply dollar cost averaging. I don't think you can make too much wrong doing that. Now let's look at the Binance exchange balance growth. And this is a bit of a longer chart. So this chart, the first one we looked here at, the FTX chart, it had a bit of a post-crash rally, right? We crashed all the way down to 3K. That was over here. Then we had a bit of a crash, a sideways movement. This was the Corona crash. The next chart over here, this is now for Binance, which already has started here during the first bull run. Okay, so this was here actually the crypto winter where we went down in the Bitcoin price by more than 80%. I think it was 82% from 20K to 3K roughly. And this is the balance development where we pretty much were going sideways for a pretty long time. And then the balance development, the Binance exchange balance, it really accelerated post-Corona crash. Okay, so this is the Corona crash. And since then, Binance was continuously accumulating up until the crash of last year, where then somewhat slowed down. But still, it is going up, right? It is going up, not as quickly anymore, but it looks like Binance continues to be bullish. I mean, it is a crypto company after all, right? If you as a crypto company, you're not really bullish on Bitcoin outperforming anything else, then why are you in the market in the first place, right? But that's only one part of the story, right? The other part of the story is they probably have a lot of derivative instruments to hedge. They do have a lot of option products. They do have a lot of futures products, and they simply need the Bitcoin to hedge all of that price volatility. That's probably also one reason why they accumulate so much. Okay, so next, we're going to look at actually the price action. Right now, we just looked at what are the big players doing, what's their current position. But actually, the reason probably why I clicked on this video was in the end, where is a potential bottom in Bitcoin? Are we currently in an equilibrium price? Have we bled as much as we could potentially do? How much risk should we currently enter when we get into Bitcoin? And so over here, we've got three different lines. The first line, the purple line over here, is the short-term holder realized price. And when we look at this, right, this purple line, when we look at this historically, in the historic past, short-term holders didn't get burned too much. What actually does short-term holders here mean for the Glassnode newsletter? It means people that hold for less than 155 days. Now, why 155 days? That's a separate analysis that Glassnode had done. Once it goes beyond 155 days, people are more likely to simply keep onto their Bitcoin. When it's below that time frame, people are more likely to trade this actively. That's why they make this cutoff over here. And historically, the price wasn't that often below this purple line. So even if you held Bitcoin just very short term, you didn't get burned that massively in the past, right? In accumulation, all of the short-term holders, they haven't been in losses that often. And when we look at this over here, right, during the Corona crash, it went below, but it even went below like the long-term holders. If we go further and further, the first time the short-term holders really got burned was with the crash in the last year, when suddenly Bitcoin did not go to 100K, as a lot of people were expecting, when Bitcoin suddenly stopped moving further after those 60K. And that's something that the short-term traders did not expect. And so the same goes now after the second all-time high, right? We have again created a new all-time high, but we did not get into price discovery mode again. The Bitcoin price didn't rise higher. Thus, the short-term holders, they got burned. Now, what I find interesting about this chart is actually the market realized price, which is currently at 24K. So the blue line, let's look at that. The blue line is remarkably stable. When we look at it, the Bitcoin price rarely went below the blue line, but maybe zoom out all of the other lines right now. Just look at the blue line first. The blue line in isolation. The blue line in isolation does not go down much, right? It's pretty stable. It either goes up or it goes sideways. And so it's a pretty good gauge of where Bitcoin will very likely find a bottom in case we ever go that low. If we look here at this price here, where we went from 6K to 3K, the final capitulation of the 2018 crypto winter, right? First went down from 20K to 6K. We had this floor for a long time. A lot of people thought this is the end of this negative momentum. And then we suddenly, boom, got this crash, this 50% crash. And then even the market realized price was beaten. What does market realized price mean? It simply means we're measuring all the wallets on Bitcoin's blockchain, and we check at what price did a Bitcoin the last time move from one wallet to the next. And so what you can see is when there's a lot of trading activity happening, then the price updates very quickly in this market realized price, right? So when we look here, we get a really sharp increase of this market realized price simply because there was so much excitement happening, right? Bitcoin changed hands all the time, and so this updates all the time and rises. Then when a crash happens, people simply get disinterested in crypto, right? They're simply just not looking anymore at their wallet, right? When you ask people during this time, hey, how's your crypto portfolio doing? You would get answers such as like, I'm not even looking anymore, right? It's like, everything's red. I'm not even logging into my account. I don't care. And so that's what's then reflected by this market realized price. People simply left their Bitcoin in the wallet. They didn't really care. The price doesn't update too much. And it did update a little bit here in this final crash. The price went slightly down, but not by much. And so the fact that this line tends to only go up or only sideways gives us an indication of where potentially a really good floor could be. If the price falls below this market realized price, at least in the past, these were historically very good buying opportunities. So if we go below this, right? Currently 24K, still quite a way to go, right? But if we go below this and you are wondering, say you're in the situation of like, should I upgrade my car, right? Maybe now I have a Toyota and I would like to buy a BMW, and Bitcoin just happens to be below this price. Maybe instead of taking the loan for that BMW, maybe you want to take that loan for Bitcoin and sell that 3 years from now and instead buy a Lamborghini, right? Just food for thought. That's what I would do. The risk versus reward during those periods of time is exceptional, at least historically. And I would assume that it's very likely, again, a very exceptional price in case we ever reach it. Nobody knows if it will happen, right? But if it does, I think a lot of people, they will simply be super scared. It will be tough to buy during such times. People will say again, they always say this when we go that low, people will say again, Bitcoin is dead, right? Nobody wants to own Bitcoin. It doesn't make sense. And the general market, the general sentiment will be super bearish. If you can then go against the general sentiment and ignore everything around you and go really heavy on your bet, then it is likely, at least in my opinion, right? No financial advice, it's likely that you're going to get rewarded for that bravery in the future if you can hold on to the Bitcoin. So that's my little rant on the market realized price, currently 24K. I don't say we will see that price, but if we ever do, then it would be, in my opinion, a very good opportunity. Now, here we've got something that's a bit complex, but it shows a bit more of the current situation as in the short-term situation, as in, are we now already very depressed in the price given that we haven't seen any positive momentum for a while? And for that, we want to look at the profit and loss by return bands for the short-term holders and for the long-term holders. So this is now for the short-term holders. We can see when this is very high, we tend to be in a heated environment. When this is very low, we tend to be in a relatively good buying opportunity. It doesn't have to be that we are in the bottom in terms of the long-term macro cycle, right? We have been exceptionally low over here, but we still went down another more than 50%, 60% or so. But it gives us a rough indication. If we are just in the middle of this trading range, as we currently are, there's nothing really specifically crazy going on. There's nothing exceptional going on. And so the Corona crash was a pretty significant event. The high over here, which I think, where was this? This was around 40K, I think. We did see quite an elevated profit for the short-term holders. And then we had our summer depression. So short term, it doesn't look like we are in any kind of extreme scenario. And so we would probably see this value here going down really sharply in case we do visit the 24K. But currently, it doesn't look like anything specific. And so when we are in a situation like this, simply need to consider what is your default mode with Bitcoin. If there's nothing special going on, what do you do with Bitcoin? Do you continue to buy it? Do you continue to dollar cost average, such as Binance? Or are you going to ignore it and you just want to buy, say, during these extreme opportunities? If you go with the second approach, then you have to be mentally very strong, right? This is psychologically very tough because if you currently don't see it as a positive investment and you only see it after a crash, you will hear a lot of voices around you that will probably go to stop you, right? You probably can't even tell anybody that you buy it because if you do, a lot of people will call you crazy. And so kind of like silently buying during such dips because there's simply so much social judgment around this. Now, let's go with the long-term holders. And here again, I find it interesting to kind of gauge where we are in the macro cycle. When this is very high, when the long-term holders are very much in profits, this can potentially be a dangerous situation. Because what does long-term holding mean? It means you buy and you don't sell for a while, but it doesn't mean you never sell, right? When you are in very heavy profits, you will sell and maybe you rebalance your portfolio. Say your Bitcoin portfolio, say you buy into Bitcoin and you buy regularly every month, and then you build up a position that's maybe from your overall wealth, you maybe have a lot of stock, maybe you have some property. From your overall wealth, Bitcoin is 10%, right? The rest is all other traditional assets. And now you see this rally happening where Bitcoin is suddenly 5xing or even 10xing, right? Corona crash to here, right, was almost a 10x. Suddenly you have way more money in crypto than you ever anticipated, right? Then suddenly half of all of your money is Bitcoin. But you probably didn't sign up for that kind of risk tolerance, right? You're obviously happy about this, but if you just started out with this intention to only hold 10% in crypto, you probably want to rebalance. You want to take profits and put this again into traditional assets. And that's then what happens. When the profit of the long-term holders gets too high, the long-term holders are liquidating, adding more supply to the market. And more supply in the market means potentially depressed prices, right? Prices go down when the long-term holders start to sell as well. And that's what we see. When these long-term holder profits, they are very elevated, we tend to see declining prices afterwards. And that happened now several times. It happened over here, it happened over here, and it also happened here at the beginning of 2021. Currently, though, we are not in that situation. The long-term holders now, they are pretty much in a balanced territory. So that doesn't mean we can't go lower here, right? We have been in a similar situation here in the crypto winter 2018, where we were in this balanced scenario. We still afterwards got a 50% crash. So what I'm secretly hoping, even though I am pretty heavily exposed to Bitcoin, but what I'm secretly hoping is that in the end, people will get less and less encouraged to buy Bitcoin, that Bitcoin will see a very clear breakout again. If we do again see a massive drop over here, where even the long-term holders are in losses, then you do have, historically speaking, very, very nice buying opportunities. Then a lot of different models will tell you to buy Bitcoin. It's not just the ones over here, right? It's also the logarithmic regression. It's the market value to realized value. There's a lot of different models that mark the absolute bottom for Bitcoin at around 20K or so. And so if we would see this, the situation would be way clearer. Then we could simply just buy. It would be scarier. It would be very scary to buy, but it would be clear. Like for the people that follow these price movements for quite a while, it would be a clear way to go risk on again. The risk versus reward during those times would be way better. If we would see Bitcoin at 20K again, then suddenly we've got maybe a downside risk of, I don't know, are we going to go below 15K? Probably not, right? Historically speaking. So we've got a downside risk of maybe 25% versus an upside risk of 4x, right? 80K would be pretty reasonable, given that over the long term, the Bitcoin adoption is increasing. So secretly, that's kind of like what I hope for, even though this would mean short-term losses. If you would get such kind of an opportunity again, that would be absolutely great, right? That's at least what I hope for. But, you know, you always hope for things. It doesn't necessarily mean that this is how things play out in the end. Now, in case you haven't yet subscribed to the channel, feel free to do so, right? I publish videos regularly. I publish videos daily, basically. And in case you want to get daily updates on how Bitcoin is doing, on how Ethereum is doing. There's the premium membership. You can also ask me any questions directly in the Telegram channel. So feel free to check that out. thebitcoinstrategy.com is the link. So that's also in the video description. You can decide to either just go with monthly, or if you sign up for yearly, you even get 2 months for free. So that's that. And in case you did enjoy this video, of course, a like would be very much appreciated as well. It will help the channel grow. It's not yet the largest channel in the world, so every like helps the algorithm. Thank you. Thanks for watching. And by the way, last but not least, there is another Bitcoin video that you probably want to watch. I do these kind of Glassnode newsletter updates regularly. So if you want to look at the last update that I've done, also discussing Bitcoin, feel free to check out this video over here. Thanks for watching and see you in that video. Bye-bye.